Hello, viewers. Welcome back to another edition of Learning About My Stock Investment Rules. This is an exciting topic. I did change some terminologies just to fit my learnings. I've been using this model for a very long time. It was a bit confusing if you go by books and understand some of these investment rules and try to implement them. I customized it, make sure that I understand exactly what I'm implementing or rules which I'm using for my investments. And some of these learnings, I'm capturing it here. I personally gained a lot of knowledge by going through some of this life cycle analysis for every stock. And primarily, I gained this knowledge by reading some books. One of my favorite book is Secret for Profiting in Bull and Bear Market by Stan Winston. And it also comes down to commitment of trying out some of these models or some of this analysis. Books might teach a lot of things nowadays. There are so many books outside in the stock market to talk about different investment rules and logics behind that. But it is also a commitment from the individuals to make sure that they try out some of these things on a consistent basis, understand what mistakes they're doing, correct them, and then carry forward some of their learnings in the next investment which they do. This analysis is core and dear to me, and I followed this for past 10 years. It did change my mindset on how I view individual stocks after I started using this analysis. I did simplify some of the terminologies and model as I explained, just to make sure that some of these terminologies are very familiar terminologies which can relate and can retain in my our memory for a longer time. If I go through some of the books and the terminologies which are used in those books, including my favorite book, which is Secret for Profiting in Bull and Bear Market, these terminologies were a little bit hard for me to retain and correlate when I'm doing the analysis for this talk. It was a bit hard for me to relate to that. At first, it was hard for me to remember every stage, and sometimes I get confused on stages and their behaviors. And later, I decided I just want to change some of the terminologies. That way, it can stick around for a longer time in my memory. And I could easily differentiate the differences too. I call this model as life cycle analysis. This analysis is very much relating to any life cycle we as a human being go through in our life. For this discussion, let's take an example of a professional. When we start off our career, we are in the learning phase and tend to find opportunities to learn about the craft, basically gain knowledge. Once we have a fair understanding or a knowledge of our craft, we get into the growth phase or accelerating phase. We tend to make money. After you reach a peak or your destination, then we try to find what is our next opportunity to grow. That's the stagnation phase where we are again back to the learning. And finally, if we find an opportunity to learn something new, then we again accelerate. If we couldn't find anything, at that stage, we tend to lose the momentum and the life cycle, which I'm going to talk about it. And this relates to how the stocks are also being evaluated. If you look at this, we can see there is a base, which is basically a learning phase. Once we have the learning phase, then they tend to accelerate or grow. Once they hit the top or the peak, they stagnate and then they decline, come back to the learning phase again. This analogy is very well suits the stock market. Learning phase, I generally call this as a base where companies are getting ready to accelerate, followed by acceleration phase where companies tend to do progress. Once they reach the top, they stagnate as they are figuring out the next idea or ideas or in general direction of the company to make more money. If the company could find anything, they take that approach. If they couldn't find anything, then there is a decline phase. Good and fundamental sound companies with excellent leadership finds the next big thing in their stagnation phase. If you see companies at the stagnation phase, they are basically exploring their options, their opportunities in the market. And that's a critical phase for any company. And that also shows the investors how well they are equipped with the knowledge and the leadership. You can basically call that as another learning phase for the company. Now, once they find an idea, a new idea, they accelerate again. Good and fundamentally sound companies with excellent leadership find the next big thing in their stagnation phase. You can also call this phase as a learning phase for them, and later they accelerate higher. That's why fundamentals are also core in your decision making. Whether you have conviction to the stock when you select a stock should be based on basic fundamentals by looking at the company, who are in the leadership positions in that company, how they have been doing historically. And those are key metrics in top of the technical analysis we do. I do have a chart to help you understand this case, and we can go over that a little bit deeper when we hit that chart. Where does investor comes into picture in this whole cycle? We are the critic, we are the ambassadors sometimes, we are the believers. We are also boosters to their growth and make them accountable. Sometimes we make them accountable based on the critics when things go generally south. How do we control this entire life cycle? It's based on the trust and the conviction we have on the company, making us to onboard whether to buy or sell the share of the company. Can I have conviction to a badly performing company? So this is a very common question comes out in the channel. If I have a conviction, even though they are doing bad, is that the right thing to do? This is a very common mistake people generally tend to make, especially beginners or early in their investment cycle. They tend to make this mistakes by developing their conviction to a badly performing company. In that phase, always look for the fundamentals, look at how historically they have been doing, what their leadership qualities are, and how they are trying to evolve when they are in this stagnation phase. That's a key thing for our learning. You don't need to go through all the balance sheets and other things to understand. But in general, look at the history of the company, understand how they have been delivering on a long run. And then especially build that awareness in the global spectrum. If I ask you which phase you would like to invest in the company, and in general answer, I know what you're thinking about. The general answer is I want to invest when the companies are in the growth phase or in the accelerating phase. And I could really visualize your answers very clearly that that's a very common answer comes out. But is that a growth phase? I assume most of you guys would have answered that. This is not a wrong answer, but in general, is this the only answer you have? I would say no. It all depends on what level of expertise or strategies in your investment process you tend to practice. Early in my investment approach, I always think that the best way of making money is through buying shares at the growth stage. And later I got bullied by several bear markets since 2000 onwards. Every bear market completely took me out of the market as I cannot buy any shares. And a fear of losing money in these markets too. But if you have said that both growth and the decline phase are the opportunity for you to make money, then answer is 100% right. It all depends on how you view the market. Be aware of the phase or the stages at any point. Visualize where the particular stock is. That's a key thing for any investors to 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 decide whether to invest or not to invest. Always have that viewpoint. This was an eye opener for me, and it took away the stress of missing opportunities at the bull market. Now I tend to invest on both phases, both in the bull market as well as in the bear market. Generally, bull market comes every 3 to 5 years period, and that actually had a little more of stress saying, okay, I should invest, earn more money in this bull market. But nowadays, after learning this whole life cycle, I could understand that every bull market followed by a bear market comes in. And then if you know the strategy of buying and selling in these two markets, basically it takes away some of your stress. Personally, I consider both bull and bear market to be the bulls in two different directions. That's how I totally understood my investment strategy in general. This is widely broadcasted. If you go to any site, they basically talk about saying, okay, buy when they are bull and stay away from the market when they are in bear. But I know people are very sentimental that they will only buy stocks when the price goes up or in general bull market, and then they tend to stay away in the bear market. But there is another strategy called short or shorting the stock. This strategy is very common, but only a very few investors, generally advanced skill set investors, tend to take this model. And it took some time for me to understand this strategy. It has to click in your mind. Once you click, you need to try out this model as an investor. Keep trying it until you get succeed. Let's keep the short or shorting for later discussion. Please tune in for my future videos. Let's stay with the current life cycle analysis. For an investor who wants to stay longer or in general wants to use the buy strategy, you want to locate stocks which are early in the accelerator or accelerating phase or growth phase. That will be your key indicator for you to make money. But let's look at some of the other topics also in this one. And I think the key indicator is to find that early accelerator or growth phase. And in addition to that, the life cycle analysis also tend to factor in some of the key indicators, which I already discussed in my previous videos. A couple of them are like the moving averages, plus pullbacks, understand how the pullbacks work, plus understand the volume in general. Combination of all three things leads you to success. If you couldn't understand from the chart whether they are trending in the right direction or to understand which life cycle stage they are in, switch between the day and the weekly chart. Then you will have a better idea. And we will discuss this a little bit more deeper when I start showing the charts. Enough of all the philosophical discussion. Let's jump into the next topic, which is basically going through the charts and understanding a little bit deeper about the whole life cycle analysis model. Let's jump into the chart. I picked up a company called Sonos. This is an audio company. They've been really doing well in the market. You could have seen all their products everywhere nowadays, competing with other audio companies. They also go through those four stages, as you can see: the base, accelerate or growth, stagnate, and decline. And then again, base. This is a life cycle. Base, as you can see, anything fluctuating closer to the moving average, generally consider this as a base phase where they are figuring out their strategy. And then there's a growth phase, or basically the accelerating phase, is when they pick up the momentum. You can see that in the volume spike here. I consider this as a breakout 200 days moving average. That is my key indicator to onboard to this particular stock, just to monitor, not just immediately buy, but just monitor the stock. Generally, when I find this kind of high volume phase, that's a key indicator for me to onboard. And I also look at some of the RSI too. At this page, it is kind of overvalued. I will wait for the stock to come back to a mode where it is ready to buy. And then you could see a gradual pullback closer to touching the 200 days moving average. Pink line is the 200 days moving average. And that's when I consider this as a buy signal. And then you can see the acceleration. This is a common model where you could see a breakout at 200 days moving average, goes up, pulls back, touches the 200 days moving average again, that's my buy signal. And then once I buy the stock, I wait for this momentum to swing. That's the key thing. Then you get into this acceleration phase. Once you hit the acceleration phase, then there's a stagnation phase. They have reached to this peak and they started stagnating. And I also look at when to get out, basically when to sell my stock. To figure that out, I also again compare with the volume and the RSI. When I picked up a spot where I could see there was a huge spike in the volume, basically the distribution. I've seen investors selling this stock at this phase. That's why it is a spike here in the volume. And then similarly, you can see it's in an overvalued state. That's the signal which I look for if I want to get out of the stock. That's a sell point. The moment once it hits the sell point, if you miss this opportunity, there's one more opportunity for you. Once it hits the crosses this 200 days moving average, that's when it's an indicator for us to figure out that there's people are getting off of this boat, and stock is actually not able to withstand the downward pressure uh, when it moves down the 200 days moving average. And that's another selling point we have. If you miss this opportunity, there's one more opportunity for you to get out. And then after that, you can see the decline line. And similarly, once it hits the 200 days moving average, again, there's a spike. Anything closer to 200 days moving average or closer to moving average, I consider this as again a base phase. And another example I wanted to show here is another company, Catalan company. This is another healthcare technology company. They distribute drug um, solutions for all the pharmaceutical and biological company. Again, you can see very clearly see the different phases of the life cycle. You can see the base very close to the moving average. They've been fluctuating in and out of the moving average. Then there's an early breakout. This is kind of a breakout session. And the stock gradually started moving upwards. And this is actually the acceleration phase. They've been doing very well. And then this is slightly kind of a stagnate or early decline phase where you can see the stock starts trending downwards. And that's a point where you can either you can sell it right away here, or you can stay until it hits the 200 days moving average and goes below that. That's another sell signal for you. You can also partially sell at this phase where if you're lucky enough to figure out this phase, you can sell a portion of it, wait for the stock to respond, and then sell remaining once you see a concrete signal or confirmation saying, okay, it is moving down towards to the decline line, where you can see that the 200, it is the price went down the 200 days moving average. That's the key part for you to sell the stock, remaining position in the stock. And then after that, gradually you can see the decline line or downtrend, we generally call this. And then similarly, you can see there's a early buy phase. I also look at this RSI in combination with volume. That's the key. These are key indicators for me to decide whether to stay in or exit this stock. Let's look into the another stock, which is a very widely discussed stock nowadays. It's about supermicrocomputers, SMCI. Most widely talked about this company. Of late, the stock has been performing remarkably well. You can see the price movement here. The moment it came out of the base, you're seeing the gradual growth, and then after that, it was just a spike. I again wanted to talk about the four phases here. Here, I am just highlighting the two phases. One is the base and the acceleration phase. Base, again, it's a very common logic. Anything moves closer to the moving average, in and out of the moving average, that I generally consider as a base. I keep monitoring the stocks. And I generally tend to onboard when it breaks out of the 200 days moving average. That's when I put it in my watch list. That's when this particular stock qualifies for buy. But I don't buy at this stage. I will wait for the stock to tell me when to buy. If you have seen my previous videos about pullbacks, that's the mechanism I use, pullbacks. I look at when the stock pulled back, closer to the 200 days moving average, that's when I tend to buy. That is also called as the early growth phase or the accelerating phase. That's my buy signal. And then if you have accumulated it, slowly I tend to find another opportunity for accumulating more stocks. And you can see there were gradually a few pullbacks. Those are I treated as an opportunity for us to onboard. I tend to gradually accumulate these shares. And if you have seen the performance in the acceleration or growth phase, this stock has been doing phenomenally well. And you can see the growth. And off late, very recently, the stock has gone to the next stage where it had a steep spike. I also have a slightly wider time period to understand a little bit more deeper on this. And you can see again the base phase, as I explained it in my previous slide, because there was a breakout of 200 days moving average and find the early growth stage or accelerating stage. That's the key indicator for you to buy stocks and stay with it. And you can see there was a gradual growth. And off late, I think in this particular phase, you could look at it, that is considered as the key accelerator or growth phase. Then after that, the stock went into a stagnation mode. And generally, if you look at my previous discussions, stagnation is a phase where the company is trying to figure out what is their next strategy. And you can see, generally, investors tend to ask this question saying, okay, when I find the stagnation phase, is this the right time to stick around with the stock? Some of the stocks generally fall down or get into the decline mode. But there are a few stocks which has a strong momentum, strong industry presence, or market favorites. But in general, they have the fundamentals, they have the products, resources to grow. They tend to take that stagnation phase as their learning phase. And you can see this particular stock, it was stagnated and it was moving in this sideways. When I say stagnate, generally the price is moving sideways. It is churning. That's what general terminologies are. And you can see at one stage, it started breakout the stagnation phase, and then you can see the steep growth again. Again, it went into the growth phase or accelerating phase. This is a classical example of moving or the company is coming out of the stagnation phase and with an acceleration again back. When you look at this stagnation phase, usually stocks which has a shorter pullbacks or tend to have another momentum towards upward direction. And that's one of the key signal I look at it. When I look at this pullbacks, I look at it saying, okay, how deep the pullbacks are. Are they gradually, or are they shorter or longer? Longer the pullbacks, I tend to stay away. Basically, I take the profits at that stage, a portion of the profit there, and then wait for the stock to tell me when to get out of it. And if I see shorter pullbacks and then momentum is continuing, I tend to stay with the stock a little bit longer. We don't know what's going to come, but at the same time, if you closely monitor the volume, RSI, as well as the moving average, these three key indicators will help you to decide whether to stay in the stock or not, or stay invested or not. I tend to stay invested when I don't see a particular signal or the momentum is still continuing. For this particular stock, you can see there was a stagnation phase. Then after one point, it accelerated again. You can also see another pattern called the cup and handle pattern. This is a very commonly used pattern. We will discuss a little bit deeper about this pattern in the later videos. But these are some of the patterns you can look at it when you're invested in a stock and you don't know which direction it is taking. Wait for these patterns to reflect. And that's the key thing. And the moment you can see when the accelerator happened, you can see there was a huge volume spike. That volume spike is my indicator saying there's something going on with the stock. People are excited about it. They're buying it. You can see this green bar is basically the buy signal. Let's take another example. The company called Roadblocks. They are a gaming company, very famous. Every kid knows about this company. They have been playing this game everywhere. And if you look at this company, of late, they have not been doing very well. You could see there was a good progress early in their IPO. Then after that, there was a steep decline. You could see they lost their momentum in the price. It just happened at the end of 2021, early phase of 2022. That's when they lost their momentum and the price started declining. And then they stayed very close in and out of the 200 days moving average that I generally consider as a base phase in the life cycle. They're still figuring out their strategy. They will come up with something, but until then, they're just staying in the base. I call this phase, if it's been there for a long time, I generally call this phase as a long base. These are opportunities for you to stay away from them, but keep monitoring them. The longer the base, they will come back stronger. So that's kind of the mechanism or a philosophy I follow. This is one of the example roadblocks, and I have another example. I did not mark anything here just to help you understand how to visualize the whole all four phases of the life cycle. You can see as an example, I'm going to explain for this particular chart. This is a Cloudflare. NET is the stock ticker. And if you look at this, this is a base where they are just early figuring out after the IPO. And after that, you could see a good progress, acceleration or growth phase. The once they start hitting this peak, there was a stagnation or early decline, and then they started declining it. Now they are very close to the 200 days moving average. And I picked up this stock because I started seeing few signals last week as I was going through some of my stock screening, and I found that there was a spike, volume spike here, and this particular stock came out of the 200 days moving average. Now I'm waiting for that pullback signal for me to onboard. And this is another example which I wanted to share about the life cycle phases. And this is a classic life cycle analysis for me. Every stock which I pick up, I go through this four phases. And this is another stock where you can see there's a gradual decline, and then it stayed below the 200 days moving average or closer to 200 days moving average, and then it started spiking. To conclude, life cycle analysis is a key analysis, and knowing the individual phases in this analysis and getting the key signal in every phase will set you for the success in the stock market. Be aware of all the phases. Try out this approach for all your future stock analysis and stay committed to this analysis. I stayed committed to this process and it has helped me to analyze the market better and kept me away from losing stocks. Definitely. Thanks for watching my video. I've added the links to my previous videos on price over moving average, pullbacks, RSI indicators. Please check out and tune in for a few more stock investment rules videos very soon. Thank you.